Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance. Live from Bloomberg World Headquarters in New York, I'm Shonali Bassick alongside Mike Regan, and we are looking at a bit of a September swoon. Bitcoin gets hit by a risk-off tone in which markets are sliding to start the week. And we are now 62 days until Election Day in the United States. Crypto companies are becoming major contributors to the races. We're going to talk to Coinbase's Paul Grewal as his firm emerges as the sector's top political donor. We're going to also talk politics with Race Capital's Edith Yeung, plus discuss the waning enthusiasm for Ether ETFs and the road ahead for regulation. But first, before it all, we're going to take a snapshot of the market today because we have a down day in Bitcoin, down more than 2% after a little bit of a lift yesterday in both Bitcoin and Ethereum. Ethereum now down more than 4.3%. Same goes for those crypto-linked stocks, MicroStrategy and Coinbase, each down more than 4%, Mike. But it's interesting. We've seen kind of a range-bound Bitcoin trading avenue, haven't we?
Yeah, it's really been interesting, Shonali. Since, say, call it the beginning of August, we've seen some pretty big up or down days for both Ether and Bitcoin. But yet we are basically where we started that late summer, early August period, about 2,500 for Ether, somewhere a little above or below 60,000 for Bitcoin. So regardless of the day-to-day drama, we are just stuck in this range for a good 6 weeks now.
Even with that range, I think what's interesting is seeing just the diminishing flows you've seen in those Ethereum ETFs, those spot ETFs since we've seen the launch. Bloomberg Intelligence now saying that assets across these ETFs have fallen below $7 billion. The flows we're showing here doesn't include Grayscale's mini trust, but it does show you how strong those flows were until the August downturn. Why such sour attitude, if you will, in Ether?
Well, one theory I have is if you hold an Ether ETF, you're not able to get that yield that you can get from staking it in if you hold it just in a traditional crypto native exchange. So I think that's meaningful to investors to get that. I don't know what the exact yield is now, but call it 3-4%. The sort of safety of holding it in an ETF form doesn't really overcome that yield you get by holding it into a crypto exchange.
We're going to talk more about that later in the show, but we are going to go outside the flows. We're going to talk about politics front and center when it comes to crypto, especially since you've seen that turn by former President Donald Trump to have the U.S. become that advocate for the industry.
On day one, I will fire Gary Gensler. I will appoint a new SEC chairman who believes America should build the future, not block the future. Upon taking office, I will immediately appoint a Bitcoin and crypto presidential advisory council.
Now, with all that said, crypto firms have been the biggest corporate contributors in 2024, led by Coinbase. And we are now joined by the firm's chief legal officer, Paul Grewal. And, Paul, we really do have a sense here of the new strategy by former President Trump into his presidential candidacy here, or the bid he's putting in. But we don't know much about the Harris campaign. But you have been, from what I understand, more in touch with that side of the election here. What do they say?
Well, good morning. We've been in touch with both sides, both the Trump campaign and the Harris campaign, as they develop their crypto policies and begin engaging with the crypto voter. And I will say that certainly the Trump campaign has been more explicit in embracing specific concrete proposals for crypto and digital assets more generally. But we've been encouraged that even as the current administration under Gary Gensler continues with its campaign of regulation by enforcement, the Harris campaign, which of course stands separate from the administration, has reached out, has expressed an interest, and has begun discussions about what a new approach to crypto and digital assets could look like.
That's fascinating. And what does it mean for the people she might have at the top? You mentioned Gary Gensler here, but under a potential future Kamala Harris presidency, you might have different leaders when it comes to regulation. What did she say?
Well, you almost certainly will have different leaders emerge. And of course, top of mind for many of us in the crypto industry is the SEC, but there are a number of agencies in the federal government which will play an important role in the development and evolution of this industry. What we're hearing is that there still remains, I think, an open mind to a new approach to crypto. We think the most important new approach is embodied in legislation, which is passed the House. That's, of course, the FIT21 bill, which provides for market structure for crypto and important investor and consumer protections. And that legislation is now being considered by the Senate. And so we expect, even as the presidential campaign roars ahead, we're going to see progress in the fall on that legislation and hopefully an embrace by both parties of the structure and certainty it would provide.
Paul, let's talk about Congress a little bit, too. I know Coinbase has been funding Fair Shake, the PAC, which is really laser focused on House and Senate races rather than the presidential race. Should the industry get a very pro-crypto Congress in 2025, is that legislation that passed the House still sort of, what you would like to see passed, or is there room for a whole new bill that's perhaps even a little bit more friendly to the industry, should you get that congressional outcome that you're looking for?
Well, no legislation is perfect, and FIT21 is no exception to that. But it's a strong bill, which includes the most critical protections for market structure. And I think there's no question about it. We are going to see a pro-crypto Congress emerge, regardless of the particular outcome in individual races and, of course, the outcome in the presidential race. We've seen evidence of this. 71 Democrats joined with almost every Republican in the House in supporting FIT21. And we're now seeing Democrats in the Senate, whether it's Senator Gillibrand, whether it's others on the Senate Banking Committee, express a real interest in moving forward with that legislation. Senator Stabenow, of course, in the Agriculture Committee. We're just pleased to see now members of both houses and on both sides of the aisle understand that 52 million Americans or more who have bought or sold a digital asset are expecting the Congress to do its job.
Yeah, Paul, I think one of the fascinating things about crypto, when you think of crypto and regulation, is the innovation in crypto is often sort of 1 or 2 steps ahead of the regulators, what they're thinking about. So I'm curious how you think about that when you think of this legislation that's on the table and when you think of Coinbase's business, an exchange company at heart, but also expanding out into a blockchain project with Base. Is it possible to sort of, make legislation that is future-proof, that considers all the different areas that crypto can get into and not have to be coming back to the question of, is this legal or not in the industry? How do you think about that future when it comes to regulation?
Well, what's very interesting is that while the innovation almost always does race ahead of the current state of the law, it hasn't raced ahead of the sentiment among millions of Americans that they want to see digital assets, cryptocurrencies, other blockchain-based technologies as part of their financial future. One of the virtues of the pending legislation is that it would call for additional rulemaking by the regulators and appropriate agencies to fill in the gaps, to write in the details that are going to evolve over time. But it will provide a durable framework that will last far longer than any one particular administration, any one particular Congress, or certainly any one particular chair of the SEC or any other agency.
It's interesting because we talk about all the players in Washington here that are needed really to change the tone, and Congress is a big part of that. You've been spending a lot of time in Ohio, as I understand it, and it's really interesting. Ohio, of course, you have a senator that has very long been a very vocal point of that Senate Banking Committee, really the committee here that has a very close relationship to the SEC and its own oversight. How does Ohio change the game?
Well, as an Ohio native, I certainly pay a lot of attention to my home state. But putting that aside, Ohio is, I think, a critical battleground for the future of crypto and the future of durable, sustainable crypto legislation. Senator Brown has expressed deep skepticism in the past about digital assets and cryptocurrencies, and yet we're seeing a real conversation around crypto take place in his race against Bernie Moreno. And I think that for either of these candidates, it's going to be critical to pay attention to the over 1 million Ohioans who have now bought and sold cryptocurrencies or digital assets, and the tens of thousands who have signed up as advocates with Stand with Crypto. The people who have said, we want to have a crypto dialogue in the political dialogue, and we're going to vote on this issue. So I think for both Senator Brown and for Mr. Marino, it's going to be critical to pay attention to what their voters want.
Paul, quickly, we started off this segment with that quote from Donald Trump promising to fire Gary Gensler. I'm wondering if that happens, are there any names sort of floating around in your circle of who you'd like to see get that job?
Well, there are certainly all sorts of names that have been floated. We don't have a particular view on which of those individuals might make the best SEC chair. I think regardless of particular names or particular individuals, what's critical is that we have an administration that is committed to sensible rules for crypto, and that in nominating someone as chair of the SEC or in confirming someone on behalf of the Senate Banking Committee, that their views on crypto be a critical part of the conversation, and that their understanding that crypto needs to be part of our financial future be a critical criteria.
Really quickly here, Paul, do you think that if there's a change in administration and a change in SEC chair, that the suits that the SEC have made against you, the nature could change?
Well, regardless of whether or not there is any change of view at the SEC as a result of a change in administration, we're prepared to litigate. We're prepared to win that case in court. We are confident that the courts are going to see this our way, and so we are absolutely laser focused on that outcome. But certainly, with a change in administration, will come the opportunity for a new SEC chair and a new commission as a whole to reconsider whether this is the right way to regulate this important emerging asset class and technology. It certainly stands in stark contrast to what we're seeing in Europe and all over the world, where there's a much more sensible, pragmatic, and still tough approach being taken that focuses on legislation, not litigation, is the answer.
Paul, absolutely fascinating to talk to you at this moment. That is Coinbase Chief Legal Officer Paul Grewal. Now, coming up, we're going to talk about venture capital sentiment in the crypto space as the Fed works to avoid a recession. Where is all that risk appetite? And to access all the latest data and news on crypto, check out CRYP Go on the terminal. This is Bloomberg. Now, crypto startups have raised more money but closed fewer deals in the most recent quarter. And Edith Yeung is the co-founder of venture capital firm in crypto, Race Capital. She's joining us now to discuss exactly what's going on. If you look at the appetite here to invest in the crypto universe, you've seen, yes, volatility this summer, but generally a big run up in prices this year. How has it impacted both the volatility and the pricing, that ripple effect into the broader venture ecosystem of crypto?
I think, obviously, beside the volatilities, and this year, there's a few things I really want to highlight on the more positive side of things, which is the approval of the Bitcoin ETF, the Ether ETF, the proliferation of stablecoin, which really drove a lot of the PayFi, real life use cases, like regardless as remittances or trade finances. Now the Solana developers ecosystem is alive and kicking with the support of PayPal and Stripe. So yes, there's a lot of volatilities, which really sometimes do set the mood of the whole crypto ecosystem. But at the same time, what is really exciting from a venture investor point of view is a lot of developers are heads down building, and that's really what it matters at the end of the day. But of course, a lot of the volatilities is so much driven by the mainstream economic environment. And if you think about it, like all the crypto community want is really regulatory clarity and economic stability.
Edith, one thing we've been talking about on this show is kind of that lackluster vibe you're getting in the current flows when you see the Ethereum ETFs, the spot ETFs. And you do see Ethereum prices also quite sluggish of late. So does this mean that demand for Ethereum is waning overall, or that the product just simply isn't as attractive as the spot ETF product, not as attractive as the Ethereum kind of spot in the crypto markets?
I think overall, from a raised capital point of view, we don't trade ETF or any like liquid token in the market. We do focus on early stage. But having said that, I do think that summer in general in the past is fairly slow. And then I think like the whole investor community, regardless of crypto, not crypto, are really sort of like taking a wait and see attitude. Wanted to know like who's going to win the presidential election in the U.S. That really matter quite a bit, and we certainly see that even in the regular stock market. So in that sense, I think it's just a matter of time, and I do look forward to after the presidential election and how it's going to turn out.
Well, Edith, I wanted to ask you, are there any sort of sectors of the industry that are most attractive right now from a venture capital standpoint? And, come election day, are there some certain type of sectors that we could expect some investments in?
Yeah, I think the whole venture industry, particularly on crypto, are still very excited about infrastructure. Any infrastructure level middleware that's related to kind of support pay-fi use cases. So we already seen, because thanks to the more and more sort of volume for stablecoin, it's kind of exciting to now see, for example, like human finance already transact over $1 billion in transaction volume for remittances between the Europe, Middle East corridor or Hong Kong to Philippines. That's actually not even like in volume in the US, which US to Mexico is an interesting corridor. That's one. And then what's really interesting to me is thanks to the dramatic turn of the presidential election, poly market, prediction market is now, I think, really gone mainstream as a use case, which I think a lot of the mass market don't even know this is powered by crypto. And that's really what, from a venture capital point of view, wanted to see. I think a lot of these use cases will happen under our nose without you even knowing it, because, a lot of the crypto rail is happening in the back end.
Right, and as you pointed out, Solana is a big center of a lot of this activity. PayPal and Stripe getting involved in Solana. Does that sort of explain the lack of enthusiasm for Ether at the moment? In a way, is Solana sort of eating Ether's lunch, so to speak?
I think if you ask Anatoly, it's never who's killing what and who's eating what. I think it's really a matter of Android versus iOS. There are always going to be developers building on iOS. There's always going to be developers building on Android. Frankly, is serving different users and developers. So in that sense, I think what we want as a crypto developer community is really for all ecosystem to flourish, because it's not one killing the other. It's, both Android and iOS and Solana and Ethereum need to coexist.
Otherwise, how do you feel about kind of the traditional crypto ecosystem versus stablecoins here? Because the adoption of stablecoins has also been facilitating the use cases that many people are looking for. Why not just stick to stablecoins where possible?
This is super valid. I'm a big supporter of stablecoin, because if you think about a few use cases that I mentioned, regardless of human finance or poly market, the user simply is transacting stablecoin. So in that sense, I think many, regardless of the PayPal of the world, Solana of the world, and I also really enjoy you guys' conversation with Circle, with Jeremy a few weeks ago. I think it's really about, regardless of what crypto world wins, we are supporting the stablecoin ecosystem, but it's just one of many crypto use cases.
Edith, we have to leave it there. It's so nice to have you on the show. That is Edith Yeung, co-founder of Race Capital. Now, coming up, there's a study linking digital assets to psychopathic traits. We're going to talk what's underpinning that study next. This is Bloomberg. Now, there's a recent academic paper by researchers at the University of Toronto and the University of Miami that found that crypto owners tend to exhibit higher levels of dark personality traits. Bloomberg's Teresa Xie reported on this, and what they found is among more than 2,000 people that they really looked into here, there were higher levels of dark behaviors such as narcissism, Machiavellianism, psychopathy, sadism, according to this paper. What exactly were they finding?
Yeah, I mean, they were saying that if you're a crypto holder, then you probably have a higher chance of distributing these dark traits, one of them being psychopathy. There were also other findings related to more likely being male, and just the idea that you're willing to and like seeing volatility in your assets and things that you invest in.
Don't look at me, you know, more likely being male psychopaths. I don't know why you guys are giving me the funny look. But Teresa, what I thought was funny is that anecdotally, now I haven't done a study on this, but we all know that crypto traders tend to have pretty good senses of humor, self-deprecating senses of humor. So you reached out to a few people to ask, who traded crypto, to ask what they thought about this. And what was their response?
Yeah, for sure. Like, honestly, when I reached out, I was a bit scared. I didn't want, you know, defensive reactions. But honestly, everyone was pretty accepting. They would even consider this not news because most people were like, yeah, if you are interested in crypto, then this is not surprising. The reason why you even got into it is because you're willing to take the chance of seeing your money go up and down.
Right. One of the quotes from a 57-year-old crypto trader, you literally have to be crazy to be involved in something where your net worth is going up $1 million and down $1 million in one day. Nothing is guaranteed. In just about a minute here, Teresa, I mean, why did the researchers here go off on this study in the first place? Do you know much about the study?
Yeah, definitely. I mean, it's not, I think it is the first one that's relating, you know, crypto holders and these traits, but it's definitely not the first one that's examined certain personality traits amongst, you know, Wall Street leadership. I know that there was one that I studied that kind of had links between abusive corporate leadership and working in these types of industries. So nothing new there, but I think for crypto, it's probably the most recent one.
Final quote from the same trader. Call us whatever you want. We are leading the way. Sounds Machiavellian to me. Teresa, thank you so much for your time and for your reporting. That is Teresa Xie. We're going to check on the markets before we let you go here. Of course, remember, we have seen a really risk-off tone here that is also driving crypto lower. We have had Bitcoin drop about 2% on the day. Ethereum dropped 4.3% today. Remember, this is in line with the broader markets as well that have experienced a bit of a downturn. And of course, a heavy week of economic data. Let's see if that makes a change. Remember, that Powell pivot is what initially sent Bitcoin higher. We have erased all of those gains in Bitcoin. After that Powell pivot, let's see if fall brings a new story. That's all for Bloomberg Crypto. Join us next week, same time, same place. This is Bloomberg.